Hi and welcome to Leavitt Brothers tutorial on Bearish Pennants. Bearish Pennants are small continuation patterns that represent a brief pause within an already existing downtrend. They're characterized by converging trend lines and have a definite bearish bias based on the overall trend. They typically form in the middle of a large move or immediately after a stock is broken down from a topping pattern. Downside breaks do not have the same volume requirements as their bullish counterparts. Like other bearish breaks, there often is a delayed volume surge. But the stock does need to close below the low of the pattern to confirm the move. Until this happens, proper trade management is very important. For starters, the drop into the pattern can be used to establish an expected target. But again, this is just for starters and should not be relied on heavily. Some traders will measure the move to the far side of the pattern and project it down from the breakout level as shown here. Others will measure to the midpoint. There is no right or wrong answer. This isn't an exact science. Targets are meant to give you a frame of reference to work from. They are not set in stone. Let's check out a couple examples. Here's Beacon. The stock had fallen out of a topping pattern and then traded into a 3-week bearish pennant. Volume was strong on the breakout, and although that's not what we want to see, the stock easily took out the low of the pattern and the stock never bounced. Volume then surged big time a couple weeks later. The move into the pattern was too conservative in forecasting a target, but that's the way it goes. Sometimes you get out early and leave a few bucks on the table. Targets are reasonable estimates that are only meant to give you a frame of reference to work from. Here's CKR. The stock topped out and then traded into a 2-week pennant pattern. Volume was strong on the break of support and then ramped up as the stock continued to fall. And the low of the pattern was easily taken out. In this case, it was the move to the midpoint of the pattern that did a nice job identifying an area the stock would run out of directional energy. Credence Systems. A steady downtrend led to this 5-week pennant. Volume was weakish on the breakdown, exactly what you want to see, and then after a brief bounce, volume surged as the stock continued down. Notice on the bounce, the upside movement of the stock was contained by a previous support trend line, which became resistance. This is fairly common. Trend lines that were once support become resistance, and resistance can become support. Let's quickly go through a few more. We find it helpful to look at successful pattern formations to train our eyes. iMany. Here's an example of a stock forming a bearish pennant immediately after breaking a long-term support trend line. Gartner Group, a 4-week pennant within a downtrend. Not only was it a textbook play, but it was the volume surge on the right side of the chart that signaled a bottom. MicroStrategy. The gaps don't discredit the pattern. After all, the stock pauses for 4 weeks within a downtrend, so it's definitely playable when support is taken out. That wraps up this tutorial. Again, bearish pennants are brief pauses within downtrends. Ideally, volume will be average when support is taken out, but then ramp up as the stock continues to fall. The move into the pattern can be used as a guide to project a target, but that target is not set in stone.